Welcome back. The South African Reserve Bank has held the repo rate steady at 6.75%, with the committee trying to push inflation closer to the 3% target. Now, still with us via Zoom, Lara Hodes, economist at Investec, and FNB senior economist Koketso Mano. Lara, Koki, thanks again for joining us this afternoon. Let's get your reactions, right? The move was expected, but we did see a bit of a deviation when it comes to the decision. 2 members voting for a cut while 4 voted for a hold. Your initial reactions, Koki?
I think certainly the MPC was similar to us when we were having the earlier
discussion.
Maybe. not necessarily 50-50, but there was definitely a split. And it just shows that there were reasons why they could have cut today. And even the tone of the statement, right, sounds a little bit very positive, actually, not a little bit. Even when you listen to the governor's responses, you know, he's telling a story around South Africa moving in the right direction, inflation expectations moving in the right direction, the rand moving in the right direction. So I think certainly the split was there.
Let's get your reactions to that. Koki mentioning that the South African story sounds pretty positive. One of the journalists at the briefing even saying that it sounds too good to be true.
Yes, so I agree with Koketso. I think definitely. So it was, as we said, a split decision. So there was that little chance of a potential cut, which we think will definitely come later in the year. But yeah, I also got that feeling. It was a very, very upbeat presentation by the governor, positive statement. However, he did, to outline those different scenarios, the potential of an oil price picking up from its current level and inflation going down at a slower rate. So there is that, even though, as I mentioned earlier, globally, the world has performed, global growth has been more resilient than previously expected. There is still a lot of uncertainty. There is still heightened geopolitical tension. So there's definitely, that potential risk, but I definitely took away from it a very positive tone.
It did sound like a dovish hold there, Lara, and I want us to zoom in on the growth picture, right? We've had, 3 quarters of straight growth over 2025, and there are expectations that we grew even further in Q4. The SARB there pegging growth at around 2% in the medium term. It was interesting how he mentioned that it does seem like fiscal and monetary policy are now working hand in hand, and we are starting to see or reap the rewards of those structural changes, even though they are slow. Does this impact your growth expectations when it comes to the country, or are you factoring in even further growth, or are you still at your base expectations for 2025 moving into 2026? Lara, that's for you.
Oh, sorry. I thought you were talking to Koketso. So as it currently stands, we're still waiting, obviously, for the fourth quarter GDP reading to come through. As the governor alluded to it, we are expecting a positive number, culminating in about 1.3% for 2025. Growing, we've penciled in around 1.5% for this year, and then of course over the medium term, I think the governor said they've got around 2%, so definitely picking up over the medium term. So risks are balanced. As he said, a lot of reform. There's been hastened implementation on those key reforms, which is positive. On the electricity front, there's been improvements. I see the latest energy availability factors was above 70. But there are risks. I mean, there's risks from the water side, and as I mentioned, I think the key risk with us being this small open economy is from the global side. So we have to wait and see what's going to happen. Potentially with Iran and the US, and there are a lot of factors to take into account, but we definitely are positive, and we have factored in upside, going forward.
And Koki, what about you when it comes to those growth expectations? We'll touch on some of the global risks to growth in a bit, but looking within, right? Sentiment really shoring up. We are seeing some changes coming through on that fiscal side. Finance Minister Enoch Godongwana, chatting to media over in WIF, talking about how fiscal consolidation, that fiscal consolidation picture looking strong, alluding to another primary surplus. Your thoughts around that, where we're heading, and it was very interesting when Governor Lesetja Kganyago also talked about the risks when it comes to inflation when growth is stronger, alluding to, yes, inflation could tick higher, but we're not growing at that point where we will see runaway inflation.
Certainly, and that's why the output gap remains, negative, right? It just shows that there is still slack in the economy. So as you remove the restrictiveness of monetary policy, maybe you start to see growth actually starting to be supported from that point of view. But just to get back to your main question, which is around the growth picture, and we are also seeing more positive growth this year. We're also in Lara's camp around 1.5% for 2026. So we agree with that. And, as we have told the story around 2025, that growth was mainly supported by the household sector. We are hoping that in 2026, it may be later in 2026, because even though sentiment may improve, it takes some time for you to actually see that filtering through, especially from a real GDP statistics point of view, to the numbers that we get from Stats SA. So it would be good this year if we could see household consumption growth supported by gross fixed capital formation growth, and that would be something that actually tells the story around South Africa's growth moving not only in the right direction, but also being driven by different engines within the economy. And I think that will build in the stability around the forecast. Now, what was interesting to me from the MPC is that I don't know when last we heard these words being associated to growth. They said growth risks are to the upside. So I think that was a very, very positive way of putting the growth picture around the South African story.
And sticking with you, Koki, around the conversation of moving the economy from consumption into investment, with the rally we are seeing in precious metal prices, and what we're seeing when it comes to our JC listed mining companies, are we expecting perhaps that money to then spill over into the economy? It could be from a tax perspective, it could be from an investment perspective, it could even be from a job creation perspective.
So where we mainly have already started to see it coming through is the wealth effects, right? So if you are invested in equities, you could already start to see that positivity coming through from your own investment position. We've already started to also see, when we speak about especially the consumer in the high end of the consumer spectrum, we've already started to see the property market recovery also being something that's sort of creating some wealth effects. So from a consumption point of view, I think the benefits are already starting to show. Now, where it comes in for fiscal is obviously tax revenue could also be positive, and fiscal consolidation would have to be something that says government is starting to crowd in private sector investment, right? And that's why you still need the reforms, even though you're going through fiscal consolidation. That's great, but you still need the reforms to bring in the private sector a little bit more in terms of investment in this economy, but also open up the structural impediments to investment and to production, right? So we know that South Africa has been deindustrializing for quite some time. So in order for you to actually see that investment on the ground, that pick up in production, some of these constraints still have to be removed. That's why you will see in the numbers, mining production, manufacturing production, not really shooting out the lights, right? Even though the price side is relatively positive.
And I think that's what a lot of South Africans are struggling to make sense of, right? We talk about the sentiment, this pent-up sentiment, but we're not seeing that filtering through to the ground. Lara, let's get your sentiments around that, what we're seeing in terms of investment and how sentiment hasn't filtered through yet to, you and I on the ground.
Yes, no, absolutely. So if you look at confidence levels, the BER's confidence surveys, they still are in negative territory. So we still have it has improved. It is less negative, especially on the consumer side, but it's still in depressed territory. And as Koketso said, it definitely takes time for that to filter through. But the key is what she was mentioning is the prices have been exceptional. We have seen a slight pickup in sentiment. So all our ducks are in a row, but we do still have these structural constraints, which are impeding investment, international investment, and the policy uncertainty is still elevated, especially within the mining sector. So even though everything's on a positive trajectory, and we're definitely hoping to see confidence levels pick up now in the near term, and that drive through into investment and growth, and there are still a lot of these impediments.
Those impediments are in place. I want to get your analysis around the trade risk, right? It doesn't seem like it has spooked us as much as we expected it to. From the auto side, we are seeing that play out. From the agri side, we did see the US backtrack on some of its tariffs, particularly when it comes to the citrus industry. Is that still something we need to worry about? Is it still a big risk, Lara?
So it's definitely a risk. We don't know what the president of the United States is going to do day by day. So there's always a potential, and we still don't have a strongly favorable relationship at this stage. So they're definitely risks. But I think what's happened is we've managed to diversify into new markets. We've managed to send more to existing trading partners and diversify into new markets. And, we seem to have been very, what's the word I'm thinking of? Like dynamic. So that's definitely helped. But I wouldn't say the risk is still not there.
Okay.
I think, I definitely say there is still trade uncertainty and definitely a risk still there, but we definitely have been more resilient than expected.
And that's what we want to hear, right? Resilience, so we can actually grow the economy. All right, before I let you go, let's get your expectations for rate cuts moving forward. Many economists are pegging in a cut in March. Do you share the same sentiments, Koki? And how many cuts do you expect for the year, actually?
So yes, we are in that camp of a March cut. That's where we're pricing it in. We do see 2 cuts this year, 25 basis point cuts this year. But it was interesting, Dauleng, just quickly, how the NPC in their scenario analysis, they said, if inflation expectations compress faster than what we think, that would be something that allows policy to become more neutral even quicker, right? So I think that's the key message. That's the key messaging going forward.
And what about you, Lara, pricing in further cuts?
Yes, definitely. So we definitely on the same thinking track as Koketso. We even wrote in our research that if we don't get a cut at this meeting, we'll definitely get one in March. So we are expecting a 25 basis point cut in March and then a further one sometime in the year at one of the later meetings. Yeah.
All right, so two cuts on the cards.
Yes.
All right. Lara, Koki, thank you so much for your time and joining us this afternoon. That was Koketso Mano, senior economist at FNB, and Investec economist Lara Hodes.